Hi everybody, welcome back. Today we're going to be taking our second tour through FreqTrade, and we're going to be setting up a few things to make life easier for you if you've got a lot of bots going on. We're going to start out by deploying Muximux, which is going to allow you to have all of your FreqTrades in one pane of glass, so you don't have to have all these browser tabs open. We're going to use Traefik in front of that so we can find our fully qualified FreqTrade instances easily. And we're going to step through those configuration files so you know how to set up a basic FreqTrade deployment. I'm going to show you how to do automated high frequency trading on cryptocurrencies. Let's get into it. For starters here, I want to show you on the screen here, I've got just a few instances of FreqTrade running in the background, and these are all in separate tabs, as you can see, but they're all in one browser window. So I don't have all these browser tabs open. I don't have to remember what all the host names are once I get them configured in Muximux. So what is Muximux? Let's check that out. Muximux is a package that lets you basically build your own web-based dashboards and tie in all these tabs so that you can have all these different things that you reference in one pane of glass. You can even throw some basic authentication in front of it. It's a pretty handy package. Let's just take a quick look at the settings and then I'll show you how to deploy it. If we go to the hamburger menu at the top right and go to settings, this is where you'll see each one of the lines that you configure for your tabs. As we build out our bots, we're gonna just define new tabs in here, and we can set the color, we can set an icon for them, we can set what kind of style they are, different types of UI options in there. And additionally at the top you'll see you can also set a username and password for your overall Muximux deployment so that you can do some basic lightweight authentication in front of this. So this is not a proxy per se, this is just something that tidies up your UIs when you've got a lot of tabs that you need to track. With that, this is the basic Docker Compose file for Muximux. Keep in mind, all of the example code that I'm showing here is on my website, so don't scramble to try to track these and write these down or anything like that. Just go click on the link in the description, take you right in there and get all that example code. So we're gonna reference the image file. We're gonna be passing this to Traefik, and we do that with the use of labels. Now, if you haven't already set up Traefik, I covered this in detail, including doing SSL certificates with Let's Encrypt. Go ahead and click on that link up there. That'll show you how to get that set up if you're not already familiar with Traefik. It's such a cool web proxy. I use it for so many different things, so you're gonna hear me reference it a lot. Definitely get familiar with Traefik if you're not already. In here, I'm just referencing a namespace for the dashboard of Muximux, so I'm calling it dashboard, okay. And I'm telling it where to find its SSL certs and what port to be exposed on. Other than that, the deployment of Muximux is pretty straightforward. So once you have that deployed, let's go ahead and deploy a couple FreqTrade instances. So if we take a look at the folder structure, you're always going to have a Docker Compose file that defines the container itself. And then we also have this user_data folder. This is a folder where we're mounting a lot of that content that is persistent for FreqTrade to operate. In there, we're going to have a few things like some backtesting results. We'll talk about backtesting, some hyperops. That's a whole separate topic for later. And of course, the SQLite database. So when you're copying this folder structure over to make another instance, there's basically three things that you need to change right out of the gate. First is you'll need to delete that SQLite database file. Obviously, if we're starting a new FreqTrade instance, we don't want the historical data of all the trades to be in our new instance. It's not relevant, it's a different strategy. Secondly, our config.json, that's where we're gonna do most of our modifications. And then thirdly is our actual strategy file. Now, I do it a little differently myself. This is just going to depend on what your level of comfort is in working with things like Git. I personally define my strategies in a completely separate Git repository so that I can track any changes I make to my strategy files rather than just try to remember what it was that I did to make a little tweak to this strategy file. No, I like revision history in Git, so I mount my strategies externally, and I'll show you how I did that. But you don't have to do it that way. The strategy files are just Python formatted files, and you can just reference them, make edits to them, and reload the configuration. Let's take a look at the configuration file. This is where, again, a lot of your changes are going to be made. Now, you'll notice when you start looking at the strategy files and you start looking at the config files, there is some overlap. The rule on that is if you have something defined both in the strategy and in the config overrides that. So just be aware of that. If you define, for example, the stake currency in a strategy file, but then you define it again in your config file and it's different, The config wins that. So that's also handy if you want to make specific tunes to a bot, but use the same strategy file for multiple different iterations. That's a good way to share that file, but then override it at the bot level. You're going to be spending an awful lot of time reviewing exactly what these configuration parameters are about over on the FreqTrade website. They're all well defined, and it's definitely worth time taking an afternoon to just step through all those things and understand what they mean, so that when you start building your strategy file or you're modifying an existing strategy, you're gonna have a better understanding of what those little parameters mean. You'll notice that one of the defaults that we're gonna be using quite a bit is this dry run. You're gonna be running your bot, you're gonna be running with a real strategy and a real configuration, and you're gonna be talking to actual cryptocurrency exchanges. But in dry run mode, it's not truly placing those orders, but it's gonna operate as if it is, and it's going to record those trades in the database so that you can have an understanding of how your strategy is doing. For the purposes of our demonstration, we're going to be using dry run mode. I want you to run in dry mode for quite a while so you understand what the implications are. There's a couple things to understand too about the bid and the ask strategy. Again, this is another piece of homework for you to understand, is how do the order books work in exchanges? Very similar to how they work in the stock market exchanges. So I want you to go read up on how order books work. This is one of the things that dry run simulates as best it can, but there's things that happen in the order book that just can't be simulated. So that's why if you were to run a dry mode strategy and run one in live mode perfectly in parallel, they're not going to track one-to-one. There'll be some slight variations. The strategy generally is going to do about the same no matter what. But if you're wondering why there's variances in your live mode and your dry run, the order book comes into play. There's things you can't simulate. So that's going to be one of the things. So let's talk about that just real high level. What is the bid and the ask strategy? And what's this business about the price side? What does that mean? Simplest terms, let's say you have an asset that is on the market now for $100. If you're trying to purchase that asset, you are the bidder. If you are selling that asset, you are on the ask side of the order book. You have different strategies that might apply. Now, this is again where the order book comes into play. So on the bid side of the strategy, where you're buying, you obviously want to pay as little as possible for that asset. So when you're putting out a bid, let's say that bid might be $99. But if you're the seller, you want to get as much for that asset as possible. So the ask side of the book, the person who's selling that asset, maybe that would start at 101. So that's your gap right there between the bid and the ask side of the order book. It's not just this asset is $100. If I give you $100, I get it for $100. That's not the way it works. That's where the bid and the ask strategy comes into play. And also where things can get a little tricky with market versus limit orders too. With a market order, when you place that bid and you decide whether or not you want to be on the bid or the ask side of the order book, that's going to determine how quickly that trade executes, but also exactly what price point it executes at. So if you're on the bid side of the order book when you are placing an intent to purchase an asset, that means you're going to be on the lower side, meaning I want to pay as little as possible for this asset. If I do a market order on the bid side of the book, that means the lower end, I have to wait until somebody on the selling side, on the ask side, submits an order at that price point. So that can take a little longer to fill, but I'm going to get a better price for that asset. Now, if it's a market order, generally it's going to still fill pretty quickly. These trades are fairly high volume. They're going to execute pretty quickly. And conversely, if I'm selling an asset, say it triggered at $100, that's where my strategy is set to sell, and I'm on the ask side of the order book, I'm trying to get as much as I can for that. So I'm going to edge to the higher end. I'm going to favor to the higher end of the order book, okay? And again, that's going to take just a little longer to fill because I need somebody else on the other side to be on the ask side of the order book in order to fill that trade, right? Remember, the exchange is not buying this asset from me. All they're doing is facilitating the trade. So a buyer and a seller have to line up on the exchange, okay? Now, it's a big marketplace, so these things happen very quickly. Now, where this can get a little tricky is with limit orders. And this is where you have to be careful. You can run into situations where you configure it wrong, you have a limit order, say your bid strategy, your buying side, is on the bid side of the order book, okay, low, and it's a limit order, I'm only gonna allow this purchase to execute at $99 or less. Again, we're making the theoretical assumption that we're talking about a $100 asset and that the bid side of the order is 99 and the ask side is 101, that's the spread. Well, you can end up in a situation where your strategy says, okay, buy, I have a buy signal. And you have it configured as I described, bid order, bid side of the book, limit order. But say that market is starting to take off like this, your trade is never going to fill because your limit order, you only pay $99 for it, but that asset started climbing and now you missed out on it. That's where market orders tend to be a little bit better in high frequency trading because yeah, you're on the lower side of the order book, but the order book only has a certain spread. So that order is still gonna fill. And conversely on a sell, that's where you can definitely get into trouble too. When you have protections built in and your strategy says, okay, it's time to sell, we're either cutting our losses or we're taking gains, whichever the case may be. And if you have it configured wrong, and it's trying to get too much of a profit out of it, the order doesn't execute fast enough or at all. And when it does execute, it's way under what your strategy said to sell it at. And it didn't sell, or it sold for way less than it should have. And you actually lost money on a trade that your strategy saw as being profitable, but the time the order executed, you lost out. Understanding the bid strategy, the ask strategy, limit orders, market orders are really, really critical to having a successful trading strategy. My opinion is that they are more critical in high frequency trading versus longer trades. How quickly those trades execute is super critical. So that's something that you definitely need to spend some time reading about. Moving down to the exchange section, this is where we're telling the bot what exchange we're going to trade on. In my particular case, I'm trading on Binance. You're gonna give it your API key and secret. When you're running in dry run, you don't need an API key because you're not actually executing real trades. FreqTrade can talk to all the supported exchanges and it's just reading the market data. So since we're not executing real trades, you don't need a real API key on it when you're in dry run. And then there's some stuff about rate limiting, which is exchange specific. You can't just run like 1,000 instances of a bot against one exchange. They're gonna throttle you. That's just way too much traffic, way too much activity out of your public IP. So you have to make sure you follow the rules on rate limiting. And next we have a few things about pair whitelists and blacklists, okay? So I have a few things in here just as examples that I set up for whitelists. So there's other things that will determine what pairs I am trading with. Just as an example, I wanted to show that no matter what those other calculations do to decide what pairs that I'm going to trade with, I want these ones to always be valid. And then conversely, there's a blacklist. So no matter what happens, I don't want to trade on these pairs. Now you can just whitelist your pairs and say, hey, here's all the pairs I want to trade. Or you can do that dynamically. So you can define either a static pair list or a volume pair list. And then you have different filters to decide, okay, as it's evaluating the pairs that are valid on that exchange, how does it determine which ones to allow and which ones to go ahead and toss out and don't trade against. So in this example, I'm using an age filter. 10 days, this means new cryptocurrencies that show up on markets, they have to be at least 10 days old in order for me to start trading against them. The idea there is new cryptocurrencies can be wildly volatile, so sometimes it's better to wait for them to just stabilize for a few days. I also have one here for range stability filter. So this is going to look back over the last 5 days and say, I want to see a minimum rate of change of 1%. So that'll just look for things that just don't really have much volume, where you don't have an opportunity to really exploit highs and lows for buying and selling opportunities. And then down in the API server section, this is where we're going to expose like actual API. It's worth noting, if you looked at FreqTrade a while ago and had some problems with understanding how the webUI works, the newest versions that are deployed have FreqUI, which is previously was a completely separate package, a separate container. That's the webUI that we'll be looking at here. That's now built into the FreqTrade container. So it makes life a lot simpler. Problems with like CORS origins, which is a real problem within browsers, all those things go away since it's all in one package. It just makes things a lot easier. So this is a basic configuration file. There's a lot more to it. And then, as I said, there's a lot of stuff over in the strategy, which is how we define what our actual buy and sell signals are, that we're going to take a look at too. So let's go look at a strategy file then. Strategies are going to look pretty similar, at least the first part of the file. So let's talk about a few of the attributes that are in there. We have some libraries that are core to Python, so those need to stay in place. Those are at the top of the file. We'll define a few core components of how we're going to run our strategy in here. Now again, this is just an example. This particular strategy file is from the FreqTrade GitHub repository. You can dig around and find it. It's something that one of the developers on that team built, and I've made a few modifications just to tinker with. They're all going to be different based on your strategy. So you'll just have to test it and see what works for you. Different market conditions affect different things. And this strategy file by no means is perfect. There's certainly market conditions that it gets hit by and can have some rough days. But let's take a look at some of the pieces of it just so we have an understanding of that. So for starters, our minimal ROI, I have this set just super high, so it's not going to do any ROI sell-offs. Secondly, I have a 5% stop loss in here, so negative 0.5 is 5%. I'm working with 1 minute candles, so a pretty tight time frame, so that tells you right off the bat that this is a high frequency type of strategy. We're doing a trailing stop, and we're also doing a trailing positive stop loss. Now, I really like the trailing positive stop loss idea. This is essentially where if you get some gains on a trade pair, you want to lock in those gains. You don't want them to dip down into your stop loss area, which is a negative. You want to maintain those. So once you cross a certain threshold, and we have that defined in here, 0.0375, that's less than 1%. Once it crosses that, it's going to trigger and say, okay, let's hang on to those profits. And if that asset were to dip down below this next line here, that's our bottom. If it dips below that amount of loss below that trigger point, it's going to go ahead and sell off and just take that minuscule profit. Now, if it continues to go up, it's not going to just sell it, but if it does take a little dip, it's going to lock in those profits and take a sale. I kind of like that strategy. It doesn't work in every situation. It's certainly a high frequency type of strategy, and you have to be careful that you're not overrunning the costs of the transaction itself and ending up with zero. So you have to play with that a little too. Next up, we have our indicators. So there's lots of these. You need to read about the different types of indicators, and these all need to be populated based on what is going to happen further down in the strategy. Our next step is going to be our buy trend. So this is going to be all of the parameters that are required to be true in order for a buy indicator to be triggered. So if you read through this closely, again, all the example code is going to be on my website. If you read through these parameters, we're going to see that it needs all of these things, these and or these types of statements, to equal true. On our trade pair, it will then indicate a buy signal has been issued. And then conversely down below, we'll do the same thing for what generates a sell signal. Now, I'm doing something a little different here, where you see here, I have no sell signal. I am not generating anything to trigger a sell. So why am I doing that? In this particular strategy, my idea is I'm only looking to sell on profits. I'm not looking to sell on indicators. So referring back to that trailing positive stop loss, that's going to be something that triggers a sell, but nothing else. So as long as that asset is continuing to go up, I'm not going to sell it. The second it dips down and starts to turn, I'm going to sell it. Now that's a very simplistic strategy. Typically you are going to want some sell indicators, some things that are going to backfill you against market conditions, and you're going to build something that will help detect what you think is a market indicator where you want to get out of that asset, even if it's negative. So with that, why don't we go take a look at what that strategy looks like in the actual web UI. So this is back to our dashboard that we talked about earlier. This is that actual strategy file in operation. And I have all of my trade pairs here that are selected by the strategy file. If I take a look at any of these individual ones, we can see how that is performing in real time. We can also look at the dashboard button here at the top. And this is going to give us more of an overview of how this strategy has performed over time. Now we can see that since I started this strategy, it's actually pulled a profit. It's pulled $336 worth of profit. Now this is a dry run. It's not running actual trade executions. It's simulated. So it starts out with a baseline of $1,000 of theoretical money, and it trades against that. So this is a good way we can see how that strategy file would have ran against real market data over time. This is a great way to flesh out strategies that are just not going to work, or find ones that are looking good and continue to refine them and ultimately decide whether or not you want to run them with real money. So we see how this one did, and there's always going to be little dips and things like that because there's going to be market conditions that you just can't catch, okay? So you're gonna have to figure out how do you build a programmatic strategy to protect you from those downturns, if possible. There's certainly downturns that you can't even protect yourself against. What happens if all of the cryptocurrency markets crash? That happens, if you've been in this market at all, that happens a lot. So when those things happen, what do you do? How do you react? Do you just stay in and try to weather the storm? How long is that storm gonna be? We don't know. That's where a well-designed strategy comes into play. So back in the trade tab here, I want you to just go through all of these tabs and see what's in there. You have, your overall status, what it's doing. It's in dry run mode. You can see the performance of the individual pairs and how many trades they've done and how much profit they've generated. So you can see profitable and unprofitable pairs. If you want to make decisions on particular pairs to whitelist and blacklist, daily stats, this gives us how much profit are we taking every single day. And you can see when there are some nasty market corrections, I'm in the negative down here. That happens for sure. We can see our pair lists and our pair locks. These are all things that you definitely want to read about on the FreqTrade website. There's tons of data. It's extremely well documented. The developers are very responsive. I've put in a few questions that they've been quick to respond to. So I really appreciate that about the community as well. If you like this video, definitely give me a thumbs up. If you're not already, please subscribe. Also, I've got a brand new Patreon site I've stood up. So if you find this data valuable, check it out. See if you want to contribute a little bit to it. I'm still going to be doing some refining. We're going to do behind the scenes types things, some early access to content, and a few things like that. So check it out, see if that's something you're interested in. Let me know in the comments what you think about this. We're gonna keep going with FreqTrade. There's gonna be more to do on this. We're gonna take a much deeper dive into strategies, and I wanna know what types of questions you have about how this works. This is really fun stuff. I really enjoy it. Thanks for watching today. I hope you have a great week, and I'll see you in the next one.